they want to do a follow-up where we'll be talking to an investor who is already in the Ghanaian market and then see what they offer. And then based on this, we should be able to ask all our questions. Now, today's webinar is hosted by Gamfen and Kaplers through our partnership with MasterCard Foundation to strengthen Ghana's non-bank financial sector. The program is called First Plus, which stands for Financial Institution Resilience and Strengthening. First Plus addresses common challenges across the industry through webinars like this, workshops, and then training sessions. CAPLAS also provide one-to-one technical assistance for financial institutions that are committed to scaling up MSME finance. Now, at the end of this webinar, we'll provide contact information if you would like to know more about the investor who will be talking to us, if you want to also find out how you can get some support or funding from them. Now, today's presenter happens to be one of our own that we know very well, Yves, and then Ifeoma from Oikocredit. And Oikocredit is an investment firm actively seeking to invest in the financial sector in Ghana. Yves is the West Africa regional manager, where he manages a portfolio of 60 million euros with diversified development products, or portfolio of 50 plus agriculture, renewable energy, inclusive finance projects across the ECOWAS region. So as I told you, they are within our own region and then also in country. Ifeoma is an Oikocredit Nigeria country manager. She has more than 24 years experience in impact financing, financial inclusion, responsible financing, and management. Throughout the webinar, we are encouraged to submit questions to our presenters, Yves and then Ifeoma, in the chat box. And then we'll also have a brief questions and answer section where you can also raise your hand and then ask your questions. Please, we'll do well to make sure we put our phones off so that we don't interrupt the presentation. But anytime a question comes up and then we need to interject, with their permission, we'll do that and then let them respond to the questions for us. Again, like the way we do it every time, when we are done, the presentation will be shared with you, as well as the recording will also be put on our platform so that you can have access to it. So on this note, I wish you very well. Let's keep calm, let's listen to them. And then when they are done, all our questions will be put before them for them to respond to us. So on this note, Yves and Ifeoma, you have the floor. Thank you very much.
Okay, thank you very much, Yo, for the introduction. Good afternoon, everybody. I'm Ufuma Egweri, country manager of Oikocredit Nigeria. I'm happy to be one of the panelists today. We are delighted to present Oikocredit to you all and the funding opportunities that you will get from Oikocredit. So I'll start the presentation, and my colleague Yves would continue at a section during the presentation. Thank you. Next slide. Next slide. Okay, thank you. So I will be giving a brief about Oikocredit, what we do, and how we could be of assistance in funding your activities. I'll start with the first slide about who we are. Oikocredit is a social impact investor and a worldwide cooperative. We have our head office in the Netherlands, and we have been in operation for over 4 decades. And we have, for this period, we've been leading positive change all over the world, and have had investments in 3 major sectors. Here on the first slide, please. 3 major sectors. We invest in financial inclusion. Under financial inclusion, we look at savings and loans. We look at rural banks, SME banks, microfinance institutions. Then also, the mission of Oikocredit actually is to empower those at the bottom of the pyramid, the low-income people, with partnership with our various partners all over the world. For the past 4 decades and more, our operation has centered around Africa, Asia, and Latin America. And we have been giving out loans, equity investment, and capacity building. We support our partners where we notice some weaknesses in form of capacity building, and we leverage on our expertise and that of consultants to strengthen areas like risk management, governance, product development. Currently, Q3 2021, our partners are about 527 in these 3 continents that I mentioned. Our total assets is in the range of 1.25 billion euros, and our total portfolio as at Q3 2021 is about 875.8 million euros. Of this amount, we have about 47% in Latin America. In Africa, we have about 22%. Looking at our funding sector, I mentioned financial inclusion. Under financial inclusion, we will be looking at, we normally look at S-banks, we look at microfinance institutions, we look at fintech. For agriculture, we also we focus on certain crops. In West Africa, we focus on cocoa, cashew, and oil palm. Then looking at type of financing, the bulk of our portfolio, the 875.8 million, is in loans. About 83% of the portfolio is in loans. 17% is in equity. We are one of the very few development institutions with regional presence and local presence in Africa and other continents. We have about 33 countries in the world, and in Africa we have a regional office in Kenya. The Kenya office covers the East African countries as well as Southern Africa. We have a hub in Cote d'Ivoire where Eve's office is. It covers the entire Francophone and Anglophone countries. I am based in Lagos. We have a hub in Nigeria where we cover Nigeria office as well as Ghana FIs. Next slide, please. Next slide, please, yeah. Okay, so part of our interest is promoting social and environmental. performance, and we partner with institutions that have a strong focus in social performance, and we currently, like I mentioned, our financial institution clients. Hello, can you hear me? Hello?
Yes, we can.
You can. Okay, it's like presentation is off.
Yeah, I'm just calling Sammy to put it back.
Okay, good. So I did mention that social and environmental performance is priority for us in Oikocredit, and we leverage on this to partner with institutions that have the social focus and target groups that provide support to the low-income businesses. And our financial inclusion partners I mentioned, out of the 527, the financial inclusion partners have reached about 32.2 million clients worldwide. And of this, about 87% are women, while 63% are rural clients. So for our agricultural partners, they have reached about 542. Second slide. I'm on the second slide. Thank you. So agricultural partners that have reached about 542,000 farmers, while the renewable energy, we've reached a household of about 68,000. Next slide, please. So the next slide is talking about the African composition. Historically, we were present in 23 African countries, and presently we focus on 12 countries, and those are the countries highlighted in orange. The total partners we have in Africa are 87, spread across East Africa and West Africa. Next slide, please. Okay, so we've been very prominent in the Ghana market for decades now. And we've had various partnerships with savings and loans, rural banks, as well as commercial banks. Highlighted here are the various partners who've been in relationship in the past and even at present. We also have investment in agriculture and renewable energy also in Ghana. So we have a very strong presence in Ghana, and we look forward to having more engagement even after this presentation. Next slide, please. Okay, so if you take it up from here. Thank you.
Yes, thank you, Ufoma, and good afternoon, everybody. Yes, so we have spoken mostly so far about Oikocredit, but we want to mention that we are not a single investor. We also represent a class of private investors, and we want to talk about the overall. I want to give you the overall picture here. So our view is that Ghana is a very important financial inclusion investment destination for investors of all types. And as you can see on the right-hand side of your slide, there was about $162 million that was invested in financial inclusion in Ghana in 2019. And that's all investments across all investment types. I will be more detailed later. So Ghana is the 8th largest country of investments in Africa. That was in 2019. As you can see at the bottom of your screen, there was about 7.6 billion of commitments in sub-Saharan countries in 2019. But as you can see, there's a gray box which represent multi-country engagements. So there were projects like for the World Bank or the African Development Bank that were cutting across countries. That's why, and they took about 3.3 billion in volume. On the left-hand side of your graphic, it's an old data from 2017 from the World Bank Findex database that shows that the level of financial inclusion in Africa like on a country basis. And you can see that Ghana is one of the countries where there's a higher percentage of adults that have an account at either a commercial bank, an MFI, a non-bank financial, etc. And we know that those numbers have increased significantly thanks to if we take into account the number of mobile money and mobile money accounts and clients. So we think that there's a very significant number of Ghanaians that now have an account, either physical or mobile. Next slide, please. Yes, so I'm coming back to the 7.6 billion in dollars invested in sub-Saharan Africa in 2019, or commitment, and we broke them down by type of recipient. So bottom, it's the banks and microfinance institutions in the darker green, and ministries of finance or Ministry of Agriculture were the normal green, and microfinance investment in Apex, that's the light green box that you see. So we see that around 40% of those total commitments are going to financial service providers, either banks or MFIs. That's the total number for sub-Saharan Africa. And what we also see is that there are multilateral banks like the World Bank, African Development Bank, the European investment banks. Those provide a significant portion of the investments to the financial sector. However, we need to be aware that those funding, that funding goes in significant parts to governments or to government-related entities. So sometimes it could be for support to the central bank in terms of their policy development or policy support. So not all of this is going into actual bank portfolios. But the estimate is that the total number of investments, about 40% of that 7 billion goes to financial services providers portfolio. And if we move down, there's a 3.5 billion that comes from DFIs. DFIs is development finance institutions. It's organizations such as OPIC, which is now the US Development Finance Corporation, or FMO or CDC in Great Britain, organization or IFC, organization of that type, or foundations are MasterCard Foundation, the Bill and Melinda Gates Foundation, Ford Foundation. So they provide significant amount into the sector as well. Although, and they offer a variety of instruments. It's not just support to direct commercial type of investment in our banks or MFI portfolio, but it also can be grants and technical assistance to both private sector and government-related entities. Our purpose, the purpose of our presentation focuses more on the bottom bullet, which is the commercial lenders. So these could be international banks such as Citibank, HSBC, and others, or it could be impact investors like ourselves who are invested in financial inclusion because it's a core part of our mandate. And you can see that we represent a very small part of the total 7 billion. We represent about 12 million in sub-Saharan direct investment in the portfolios. Next slide, please. Yes, so example of those organizations, we are not very well known, but these are some of our, what we call our friendly competitors. So they are our partners. They are in the same type of asset class as ourselves. And these are German, Swiss, and American companies that we generally cooperate with. And they provide the same type of work as we do. So the examples that we will give further down in the presentation could be also applied by those entities. And you can see on the graph, which is on the left-hand side, that there has been significant growth in our collective investments in the country, in the region, in sub-Saharan African country. And I will also make the estimate that the investments into Ghana, and particularly into Ghana financial inclusion markets, has followed a similar pattern in terms of growth rate of 20% year on year. Next slide, please. So that's roughly the presentation of the overall market. The fact that, number one, there's a significant amount of funding that is going into financial inclusion. And I said about 160 million that was invested just for Ghana in 2019. So we would like to take a pause here and ask a few questions and open for a question briefly for the part that we've just presented. Back to you, Yao.
Thank you very much, sir, and Ifeoma, for the good presentation that we've seen. Just a quick question before others come in. I would like to find out whether Oikocredit, you do only debt or you invest in both debt and equity? And if so, do you also do guarantees for companies that need them?
Yes, yeah, we intended to come back to that question later on, but yeah, we do debt and equity. At the moment, we do not provide guarantees, but we have done that in the past. Rather, we think that we prefer to invest directly into organizations. There are a lot of good organizations internationally that provide financial guarantees. So we can point to some of these, like USAID or Africa Guarantee Fund, who do an excellent job. So we don't want to compete against them. One other area that that Ufoma mentioned was technical assistance or capacity building. However, we tend to partner with organizations such as GAMFIN and CAP Plus to provide those technical assistance projects.
Okay, thank you. I have two people with their hands up. Please, can the first person ask your question? Godfrey.
We need to unmute him. We need to unmute him.
Okay. I think Godfrey is not hearing us. Can we have Harry Nati?
He can type his question.
Yeah.
Yeah.
But we'll come back to him. Harry Nati, can you please ask your question?
My name is Harinati Akwete.
Thank you, sir. Your question, sir.
Yeah, I would like to find out what goes into the debt and equity financing. Basically, if they can come out to tell us the requirements, the steps that the institutions can, further take to acquire this financial assistance or financial inclusion. Thank you very much.
Thank you very much, Ainata. Yeah, if we make that presentation shortly, they'll give you the perspective concerning debt and equity. If maybe you could just go ahead and make that presentation so that we could take more questions.
Okay, yes, that was the subject of the second part. So let's go to the next slide, please. Next, please.
Yes.
Yes.
Can we hear the question from the Godfred before we move on?
Oh, okay, sorry. Yeah.
So Godfred, you have the floor. Hello, Godfred. Okay, Yves, thank you. You can go on now. Thank you.
Okay. All right. So as Ufoma was saying, is that we wear two caps. We are an impact investor, so we look at financial returns, but we also look at social impact. So when we look at an organization that we want to invest in, we look both at what we call the risk analysis, the viability risk analysis. That's what you see on the left-hand side. And then we look at the ESG aspects, which are items on the right-hand side. So I will not spend too much time on the financial or the risk analysis, which are very classic. So for example, financial aspect, we look at solvency, liquidity, operational sustainability, governance and supervision. We ask ourselves whether the organization is regulated by the central bank, is monitored by the Ministry of Finance. We look at the quality of the board, etc. Management, whether there are external auditors, etc. But what is important for us, and I will speak on behalf of not just Oikocredit, but also on behalf of the other impact investors, is, and this is less familiar for our audience here, is what we call the environmental, social, and governance aspect. So first of all, if we take a step back, the reason why we are in this business is that we want to provide access to finance to populations, to disadvantaged populations. So we need to find a way to translate our mission and vision into actual practices. So, and we hold ourselves accountable for that. So we want to also hold you as our partners accountable for this as well. So the first dimension is outreach and inclusion. So for example, we would look at the percentage of rural clients. If the organization, for example, is a rural bank, we will look at the percentage of rural clients. If the organization claims to be targeting women, we will look obviously at the percentage of women. We will look at areas where the bank branches are located. So that all those are assessed. Then the second dimension is client welfare, which is what are the pricing policy of the institution? What are the collection practices? Is there a way to prevent over-indebtedness, etc.? The same goes for social governance. Social governance in our language is, for example, what is the percentage of women in board or in management? What is the distribution of capital? Is capital in the hands of one person or is it widely dispersed, etc.? Then there's a dimension on environment. So we look at the capacity of the organization to assess to whether the organization has an exclusion list, whether the organization promotes good environmental practices, not just to its staff, but also to its clients, etc., etc. And then there's responsibility to the community and to staff. So we assess the extent to which the organization uses some of its profits to reinvest into its local community. Or we'll look also at the staff management practices, whether there are staff grievances, whether there are employee satisfaction survey, etc. So all of these, we assess them not just at the time when we do the first contact, but in the process of conducting our due diligence. I've put a small icon at the bottom, which is the universal standard for social and environmental performance. These are published by what we call the Social Performance Task Force. Social Performance Task Force is an international association or consortium regrouping most practitioners, investors, financial institutions to share good practices and specifically to codify those practices. And you can see that we've tried as Oikocredit to map those practices and those universal standards against our own ESG scorecard. So what we have at Oikocredit, we have an ESG scorecard that, as much as possible, map against those universal standards. We will also refer to you in terms of resources to that website. It's very important moving forward. So universal standard for social and environmental performance. Next slide, please. Before everybody asks, we also have what we call an interest rate calculation model, because that's what is important to financial managers, CFOs, even CEOs at banks and financial institutions. So for a purpose of transparency, because we want to hold ourselves accountable, so we want to show you how we compute the interest rates that will be charged for a loan, for example. So we start out at what we call the external cost of capital. So that's the cost that Oikocredit will have to support on the market. So it depends on the currency. So you can have a Euro loan or USD loan or a Ghana CD loan. So these three items, Euribor, LIBOR, or T-bill, are where we start our computation of interest rate. And then we would add a number of costs on top of those. So there's what we call operational cost coverage, which is a computation of our cost of operating. And it's typically on a declining basis. So a larger loan will cost less than a smaller loan. And someone who's been with us and has already had like two prior loans will have typically a lower fee to pay than someone who is coming for the first time. So that's the comments that I made here. Then there are country risk that are applicable for Euro loans or dollar loans. In the case of Ghana CD loans, they are integrated already into the T-bill. And then there's project risk, which relates to score was given in the project viability risk score that I mentioned in the previous slide. And then for exceptional institution, and we can give out some discounts. So that's how we compute the interest rate. We are happy to go into more details, but for now, what we want to go more to focus more is how we structure our operations, particularly on the lending side, but I will come back also on the equity. Next slide quickly. Yeah, so as a result of global benchmarks, we've realized that we needed to tailor the structure of some of our projects here in West Africa to be closer to the reality of the market. I will not spend too much time on the key weaknesses that we've identified, but most of you would be familiar that in some of our institutions, there's insufficient, inadequate, or not strong enough internal controls, internal audits. The liquidity management could be improved, and as well as credit management. As a result of this, we've adjusted our structure based on our findings, but also based on the overall Oikocredit's strategy and prudential guidelines. Next slide, please. typically for a loan, at the time of structuring and I would say negotiation, we will focus on the amount of the loan, what we call from a risk perspective, it's the exposure, the term, which is the duration or the total duration of the loan, the repayment frequency, as well as the legal requirements in the form of KYC and securities. So I will break those down on one by one. Next slide, please. So yeah, so in terms of cognizant of time, so I'm sorry if I try to move quickly. Yeah, so in terms of amount, we have some prudential guidelines. For example, the Oikocredit loan amount cannot exceed the level of equity of the institution, or it cannot exceed the level of the total deposits of in the case of deposit-taking institution. And the maximum is also 30% or 33% of the gross loan portfolio. So we insist on that so that you can yourself have an idea of how much you can request in terms of borrowing with Oikocredit or even with the other international lenders. And obviously we will monitor some of the solvency ratio in line with the Bank of Ghana requirements. So typically we will target a debt to equity ratio that will not be higher than 5 times. We will also request ratings, external ratings from Microrate or Microfinanza, etc. So that's in terms of loan size. Then in terms of loan, next slide for the repayment for the terms. So in terms of loan duration, we typically will give a 3-year loan for a new institution that we work for the first time. And we can even do less than that. On the other hand, we can go up to 7 years or even 10 years for well-established organizations. And in terms of repayment frequency, the main point is that we will align ourselves to the cash flow requirements and the cash flow cycle of the institution. So typically it would be quarterly repayments, but in most cases that we've seen in Ghana, it was even monthly. We can also do monthly repayment, either for the capital or both capital and interest. So yeah, so these are typical proposals that we make to our institutions. Next slide, please. Yeah, and I will finish the presentation here without drowning you too much into the KYC requirements, because these are very much well known for everybody. So, but these are significant, and they tend to increase as our recent experience have shown that over the past 2-3 years, the requirements information requirements to comply with the central bank and other international institutions has gone up significantly. So we would need from you to have detailed ownership structure, not just at the direct shareholdings of the institution, but we sometimes will ask for shareholdings of your shareholders. We obviously will ask for articles of incorporation, copies of license, board and management profiles, including their source of wealth. We will assess the AML procedures, AML and the CFT procedures of the bank or the institutions. So these are really significant information that we would have asked for you, even at some stage, even before conducting the due diligence. We will also, but that is more relating to the offer that we would make, we'll ask you to propose some securities to give us comfort as we would be lending to our organization. So, for example, we will ask for a pledge on the portfolio covering the outstanding amounts of the Oikocredit loan. In the case of a subsidiary of an international group, we will ask a guarantee for a corporate guarantee from the parent. In some cases where we do not have adequate securities, we may ask for mortgage either on the head office or on the adequate land. So roughly and quickly, these are the items that we typically require and the process by which we would go through to conduct our due diligence. But I will, before moving into the next slide, which is a Q&A, I would like to summarize or to answer a question. The first thing that we would ask are latest financial audited accounts and a copy of the business plan. So that will give us an idea of the intention of the institution from its mission, its vision, as well as its, let's say, 3 or 5 years strategy. And on that basis, we can already start drawing high-level term sheets that we would be offering you, a sort of letter of intent. Based on those, you will, the CEO and the CFO of the financial institution will negotiate some of the terms, adjust some of our proposal in terms of amount, currency, frequency of repayment, level of the securities. I didn't mention the covenants, but the covenants are very important. Covenants are financial and social performance indicators that we will be monitoring during the term of the loan. So all of these, we have a courtship process in which we will negotiate. Once agreed with our terms, then we go into what we call the due diligence process. And the due diligence process is going through into further detail into the documentation provided, having on-site or video calls with key managers and key board members of the organization, and etc. And at the end of the due diligence, we then write our credit memo, which is sent electronically to our Africa committee. So we have a committee that sits for the review of Africa-based projects. Then once they endorse our project, we then go into the international committee. And then the international committee now then approves the loan or approves with some conditions or slightly amend the terms that we initially negotiated. And then we go into the legal diligence process, which is a precursor to the disbursement. Sorry, I've been long, but I think it was important for us to show the process. Next slide, please. And the next slide is for you to contribute either by asking questions or by sharing your experiences in raising funds, either in the form of debt or equity. I will come back to equity. I still have that question. And yeah, we're looking for your contributions or your queries, your concerns. Back to you, Yao. Or please, if you have anything that we have not covered that you are interested in.
Thank you.
Yao?
Yeah, thank you very much for the presentation. We have some questions in the chat box already. One from Henry. He wanted a distinction between the processes involved in raising a debt or an equity from Oikocredit, which I know you will come back to it. And then there's also another question about whether you lend in cedis or in dollars. And definitely, I think for those who follow the trend, you know, in Ghana, we have a challenge with the dollar issue. So largely people will ask whether I can contract loans in dollars or in cedis.
Yes,
so
it's a very important question.
Yeah.
Yes,
so respond to these two and then we'll come back.
Yes, it's a very important question. We can lend in dollars, we can lend in cedis. The key difference between the two is that when we lend in cedis, we are the ones taking the foreign exchange risk. when we lend in dollars, you are the ones taking the foreign exchange risk. So that's the key difference. But obviously, as we have seen over the past 2-3 years, it has been a challenge. The exchange rate has been a challenge. So that is translated in the interest rate. So typically we would charge higher interest rates in CDs than in dollars. That I will not go back to finance 101, but that's a basic rule of international finance. Let's jump 2 slides. I would go to equity. 2 slides, please. Yeah, one more, 2 more, one more. Yeah, equity. No, come back. So equity is very important. We went too fast on the Q&A number 1, the discussion number 1. I wanted to ask the audience what are the key challenges that they are facing, because we know that with COVID, a lot of institutions have had a significant amount in a portfolio at risk. They have had to continue paying for their staff without having sufficient interest charged to their clients. So profitability has been a challenge, either in the form of increased operating cost, or because they also had to put in place the measures against the social distancing, but also on the financial and the cost of risk, there was significant increase in those. Therefore, those have affected the level of solvency. For a lot of institutions, there are challenges to meet the central bank solvency ratios, prudential ratios, and there's a significant pressure on institutions today to strengthen their equity base or their capitalization. So we are regularly approached to join organizations as partner in a form of equity. And we have several types of equity. So I'm presenting here only the common equity. So common equity is to invest as a standard shareholder into the institution, into the bank or the financial, the microfinance institution. So that is that we will become a shareholder like the other shareholders. So obviously it's very important or very interesting for the institution because it helps to improve the balance sheet structure. It significantly supports with efforts to comply with the central bank prudential ratios, especially over the past 2-3 years, now that the Bank of Ghana has significantly increased the capitalization requirements. Also, we become a real partner. So we will have someone sitting on the board, bringing our Oikocredit expertise and knowledge. We will also be very patient because as a shareholder, we don't typically come out after 1 year or 2 years. So we are there for the long term. And in case of a difficulty, we will not ask you for the money to come out. So that's the main interest. That's for common equity. We have other types. We have subordinated debt, which is a tier 2 capital, or it can be accounted for as tier 2 capital without us being actual shareholders. We also have convertible debt, which is also a debt that can then be converted into capital under a few conditions. I hope this helps. The due diligence process is a lot more involved because we become a shareholder, so we would have some responsibility vis-a-vis Ministry of Finance, vis-a-vis central bank. So in terms of due diligence, we go further. The items to be negotiated are also much more detailed. For those who are familiar, a loan agreement is much thinner in terms of volume than a shareholders agreement. But yeah, I hope this clarifies the question from Harry. Yao, yeah, Yao, come back. Let's come back 3 slides, please. One more, yeah, let's stay here.
Okay, thank you. I'll call on Francis to ask your question. Francis. Francis Abbey.
Okay, hello.
Yeah, hello, Francis, please go ahead.
Thank you very much. So I basically have two questions. I think in your presentation, Yves, if my memory serves me right, I saw that one of your challenges is that some of the institutions are unable to meet your standard. I want to find out that in such instances, do you offer some help or support to such institutions? That is one. And then also, some of us are individual microcreditors who, of course, have been licensed by the Bank of Ghana, but are registered as sole proprietorship. I realize with some of your requirements, articles of association and all those things that are basically related to limited liability companies. I don't know if, I mean, those of us individual microcredit fall within your class of partners or institutions that you support. Thank you.
The easiest answer for me is to say that we are a wholesaler. So what that means is that we will not do a loan of $100,000. We will typically do 500,000, or let's say even from 1 to 5 million in terms of dollars, which takes you very far in terms of CDs. That's the first point. And then the second point relates to the size of your organization. Our loan amount cannot exceed your level of equity. So you can automatically do the computation. What is the total equity of your institution? And you try to match that against the minimum $1 million that we do. You see, so, or let's say €1 million. So that's 7 million CDs. So if we start at 7 million CDs, you would realize that if you don't meet those criteria, when you apply to us, we will ask you to first work with your own bank first, and once you reach the level of development required by Oikocredit, then we will be able to support you. So that's the non-diplomatic answer. Many of our colleagues will give a more diplomatic, but because of time, I need to be quite undiplomatic.
Thank you. Daniel Kwame Hasford, can you please have the floor? Daniel. Okay. Harry, do you still have a question, or is the old hand?
Yeah. Can I ask Sami to go back to slide 13 so we can show what I mean by challenges? Yeah, one more. Yeah. So what we meant, no, you went too far. Operational challenges. So what we meant by difficulty in meeting Oikocredit standards is that we will have to work with GAMFIN and CAPLUS to groom some of the institutions. Next slide, please. To groom some of the institutions so that they come to a level where they can meet Oikocredit standards. What I mean by Oikocredit standard is, for example, have equity level of let's say 5 to 7 million CDs, Ghana CDs. You see, by working with or following the training sessions organized by GAMFIN, the technical assistance provided by CAPLUS and others, then those organizations, those institutions will graduate into the levels where investors, international investors like ourselves and others will be able to support them. So, but in the meantime, it's preferable to work with either your local bank or your Apex in the case of the rural banks. So to be more specific, as I mentioned earlier, if we look, so the level of portfolio, PAR stands for portfolio at risk. We want to work with organizations that have a portfolio at risk that is comparable to those well-performing institutions, either in the country or also in other parts of Africa. We also would want to have some comfort as the well-functioning three-tiered board structure or governance structure. So we have a general assembly that elects a board, and a board that actually work as a supervisor to the management. And then we have a competent management team that is actually doing the work of running the business. So all those things are very important. And then we need to have clear separations between those three tiers. So these are some of the examples of the technical assistance or the capacity building needs that we find when we conduct our due diligence in organizations that have not reached or that have not yet reached the level of maturity that we are looking for.
Good. Thank you. Can we go back to Harry? Do you still have a question?
Yes, I have a question.
Okay, please ask.
I want to find out from him whether they have a moratorium or they give a moratorium on the loans, and also secondly, I would also like to know or to add up to what he said. You see, normally in Ghana here, so far so good, the kind of institutions that lended cash to us actually did not take us through this rigorous process, because like my brother rightly said initially, some of us are individual institutions licensed by Bank of Ghana. We are a member of the Microcredit Association in good standing, and we are managing a portfolio quite appreciable. So if you would want to take us through this rigorous process, and then to maybe a requirement of a board of governance, a requirement of covenant, a requirement of all these things, that means that I don't think we are at the right place, because so that's why I was expecting to see a distinction between all the tiers, because we are under tier 4. We have a microcredit that are running under tier 3. We have those running under tier 4. So basically, we have to be very clear where we can actually assess some of your credit or your equity in. So the distinction has to be made for us, and also in terms of the requirements to assess your facilities or your loans also has to be made, so that we'll be able to know whether we qualify or not. Because over here in Ghana, they only look at, we have a prudential report we send to the Bank of Ghana through the Microcredit Association Ghana, which is a quarterly report. And so they assess it, and then they also, take some security collateral from us, basically a car document or something. But where it happens that maybe your KYC, your customer due diligence has to come with acceptance of a mortgage or any other things. I heard you mentioning it in your presentation. I think all those we don't go through that rigorous process. Basically, our office premise is also inspected, and also in terms of any assets that we have, maybe any other, if one is doing any other business or has diversified into any other business, fine. But these are basically the things they require from us. So I would like to find out from you if you can make some variations. And also, you should also answer the question whether you have a moratorium on the loans. Thank you very much.
Thank you very much. Let's move 2 slides or 3 slides. Next. Yeah, next again. Yeah, so we can provide moratorium. As I said, we try as much as possible to align ourselves to the cash flow to your cash flow requirement. So we can give 3 months moratorium, 6 months, 9 months, or even a year, or even 5 years. Let's say you need a subordinated debt, which needs to qualify as tier 2 from the central bank. The central bank may require that the moratorium should exceed, like, let's say 48 months. So we can give you a long grace period, but there's a price attached to it. So the longer grace period you will get, the higher interest rate you will have to pay also. That's an answer to the second question. The first question is on the due diligence process, or why is it more rigorous than some of the banks that you work with? The easiest and the clear answer is that the key difference between ourselves and the bank is that we don't operate your accounts. So when you work with the bank has the chance to see the cash flows going through the bank account and the regularity of the funds, the volume of the funds that go into that account. We don't have that luxury. So all we can ask for are information for the credit application and the file. So that's why we're quite particular in our due diligence process, and not just in terms of financial analysis, but in terms of ESG, as I mentioned, and then we put a significant emphasis on both social and governance aspect. Maybe Ufoma, you want to add to my point as to why we are particular.
Yes, yeah, you've mentioned the key issues there. I just want to also emphasize that collateral that was mentioned in terms of mortgage and the rest is on a case-by-case basis, and it's also based on the project risk. If you look at the viability risk that one of the slides speak to, we did indicated there that collateral or security provided is on a case-by-case basis. You know, some institutions, it may require collateral, some no collateral. Then that depends on the project risk. During the due diligence and the analysis, we tend to discuss this with each of the partners to agree on what is workable. So like Eve mentioned, we don't have access to your bank details. So it just check that we do in terms of due diligence, looking at your financials, looking at your governance, looking at your risk. Those are the normal assessments that are required to be done. Basically before lending. So it's a normal process. It's really not too rigorous, if I would say. Processes are quite fast as well. In as much as we do this due diligence and look at all these key issues, we try to be fast in the process of applying and also disbursement, depending on how fast we get your documents and how fast you are available for due diligence. We could, as a matter of fact, disburse within an appreciable time. delay could come in where we have to, have more little delay. But then the process is, despite what we look at for, the timeline is quite appreciable.
Okay, so hello.
Yeah,
Please, a
come in.
follow-up question.
Okay.
Yes, I heard in the presentation of the answers that the higher the moratorium months or years, the riskier it also affects that of the interest or the loan. I want to know, normally, when you give a moratorium of, let's say, 1 year, it shouldn't affect the interest rate. It has to take effect upon, upon resumption of payment. So for it to affect the interest rate, as in maybe you give a moratorium of, let's say, 6 months after January, then let's say by August you have to start payment. So how is the interest rate going to affect? How is the moratorium going to affect the interest rate? It is not clear, because from where I stand, institutions or basically institutions that supported this with finance, when they give us a moratorium of, let's say, 1 month, and we start payment, we pay the interest following the principal and the interest. Maybe in subsequent months, let's say 3 months or more. You understand? But yours is very good. We give a moratorium of 6 months on case by case basis, a year, 5 years, depending on the institution and how liquid you are or how solvent you are. But then I want to know that how does it affect the interest rates? In what way?
Okay, there are three aspects. The first one is on the computation itself, it does not affect. So if you have a long grace period or a short grace period, it should not affect the computation of the interest payments to be made. So yeah, so maybe I was not clear enough when I presented this. The second aspect is that if we negotiate and let's say we would offer you a 6-month moratorium and you ask for a 2-year moratorium, then we will see it as a risk factor. The fact that you are not comfortable paying starting repaying within 6 months. And then we will start analyzing more in detail what type of other financial commitments does the institution have. So what the concern would be is that we would think that the money would be used, the Oikocredit's money would be used to repay others. And that increased risk perception is automatically translated into higher interest rate for us. That's what I meant by the impact. And the third point is concerning long grace periods. So if we offer a long moratorium, and that is generally applicable for subordinated debt, it means, like the term indicates, subordinated debt shows that in the case of a default, the banks and other senior lenders will take precedence to that subordinated debt. So we would look like a shareholder rather than a lender. So when you are a shareholder, you are expecting to get a higher return than the lender. So that was my point. I hope that makes sense.
Yeah, thank you very much. I think time is fast spent, and we'll have just one last question. But for those of you in Ghana, there's an Oikocredit here in Ghana. There's an office at Rage that we can always direct you to visit whenever you have questions or a need for any investment into your business. But just a quick question before Yves and then Usioma take leave of us. I want to know the difference between an impact investor and a normal bank.
Yes, thank you. And while I'm talking, maybe we should bring back the page on GAMFIN and CAP Plus. Yeah, move down 2 slides, I think. Yeah, one more. Yeah. So yes, no, you've gone too fast. So Oikocredit, as I mentioned, yes, that's the one. Yeah, I mentioned earlier that we are not a bank, so it means that we don't hold the institution's account to be able to trace the flow. But more importantly, we are an impact investor. So we are looking, in addition to a financial return on our investment, we are looking to have an impact, a social impact. So for example, and that's the main reason why we are here today, is that we partner with GAMFIN, with CAPLUS and others to enable to access to finance for disadvantaged people, to populations that normally do not have access to traditional banking, commercial banking systems. Our main mission is to finance your type of institutions so that you can expand on your network, you can move into digitalization, and therefore reach out more clients. That's really the objective. Yeah, that's really the objective. And sorry, it looks like my line is not so good. Can you hear me, Yao?
Yes, we can hear you.
Okay. Yes. So it is very important for us to not only monitor the way the loan is going, but actually to report on the progress done by the institution. So, for example, UFOMA cited the percentage, like 82% of institution reached by financed by Oikocredit reach women. So we will trace over the lifetime of the loan, the Oikocredit loan, we will trace your progress or the progress made by the institution in its outreach, in its practices, in client protection practices. And these are items that are clear loan articles. So these are part of our loan agreement with you, that we would be expecting appropriate practices, that we would be expecting that you actually trace your exclusion list, etc. So that's really the key difference between us and banks. That the mission aspect, orientation.
Yeah, so the impact also, when during my presentation, I did inform that our mission is to empower the low-income people. So most social impact investors like Oikocredit, they narrow down the impact of their funding to those at the bottom of the pyramid, or those at the bottom of the society, those that the conventional banks really do not look at. So our work invest is such that it improves their livelihood, it improves their businesses. And when you interact with some of our clients, the partners' clients, you hear that they said, oh, the support from Oikocredit partners, from Oikocredit has, enabled them to, expand their businesses, create jobs, improve their livelihood. They have been able to, build their houses and so those impacts are quite important to us. Not only do we look at the social, we also look at the environmental. That's why we also mentioned that we are into renewable energy, clean energy for the environment.
And just to complete, to add to Former's point, it is just a small point, and this is driven by our investors. So Oikocredit itself has some shareholders, and we are an international financial cooperative. So we function as a cooperative. So our members really want their funds, obviously, to generate a modest return, but especially to have that impact that Ufoma was mentioning.
Good. Thank you very much, Yves and Ifeoma. All too soon, we've come to the end of this presentation, but I've enjoyed it. I've gotten my share, and I believe that you also have a share of whatever you came for. And again, I believe that you are also much aware that this process is ongoing. And come February, we have a number of activities lined up for us to participate. We'll still come back to you, share the dates again with you. But just for a quick notification, February 2nd, there will be a webinar like this on agri finance, value chain financing approach. And we are bringing you another seasoned person to come and show us how to go about it, especially as financial institutions. How do we finance agriculture? And then we'll do a follow-up on the 8th. Then on the 9th, there will be another one for just the rural banks. On the 10th, there will be another one for microfinance companies. So all the people will have the timetables as we move along. We also have other webinars on emotional intelligence, and then this one, there'll be an in-person session of it, one in Kumasi, one in Accra. And as we move along, we'll ask you to register to be a part of this. So on this note, I will say thank you to our panelists for the good work that they've done this afternoon. And as I told you earlier on, we'll share the presentations with you for any further follow-ups and then things you want to know. But you can always call on Gamfen to make any inquiry if you want to get to Oikocredit or get to know much more about the First Plus project. We will be available to discuss much more details with you. Thank you very much for your participation, and I wish you well in your next endeavor. Thank you. So if and then if you are, thank you for joining us this afternoon.
Thank you for having us. It's a pleasure.
Thank you. So the meeting has come to an end, and then we'll be sharing the information with everyone, as said earlier on. Thank you. Bye-bye.
Bye.